Hey, what's up? This is DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Unity Software, ticker symbol U. And so I am recording this on Friday, April 25th during market hours, and Unity is currently trading around $22.60, being up so far on the day about 1.3% or so, but of course that number is changing since the market is open. And so I wanted to go over the chart because I noticed something in the unusual whales options data that struck me as kind of interesting, but kind of contrasting that, it does look like in the chart we might be at some resistance. So I wanted to go over that, and also relating to what I see in the options data here with Unity. It looks pretty bullish right before earnings. I also saw a lot of bullish data on Intel right before their earnings, but then it came down. So, good to take all of this with a grain of salt. I'm just kind of sharing my perspective and just very curious about this. And also, I might just ramble on about stuff. I just find that to be more useful, but perhaps, views will go down. That's fine with me. I don't really care. I'm just excited about the chart and the data and wanted to share. And so, we do have earnings coming up here on May 7th. And if we do look over at unusual whales, that will tell us, basically, where we might be expecting price to go, whether up or down percentage moves. So that'll be interesting to check out. But really, I mean, it does look like we are getting into resistance here right around, 2250 or so. We got that orange uptrend, which is based on these two pivot lows that we can see over here, one being the low from August 7th, and the other one being the low from November 15th. And so, that served as a very nice dip buying level over here before we got I believe, 100% move, 65% move to the upside. Oops. And oh gosh. Don't, let's see. There we go. Going to delete that. Sorry about that. But yeah, that did also serve as support over here, although it wasn't such a nice bounce. Kind of started to break below it. And then over here we did to retest this green uptrend. Actually, that's a horizontal line at 1538. And we did pierce it, hitting a low on April 7th of 1533. So that was a really nice dip buying opportunity. I have to say I did add to my share position there, but very small dip buy. And from there, it looks like we're up about 46%. So looking pretty nice there. And then looking at this, we did get, it looks like from the move here, we did get a retracement to around the 382. I'm just going to throw up the 50% retracement to see if, nope, we did not get down that far. So the 382 there was, a good dip buying level, but we of course could get rejected here and then go below 1844. And it does look like, if I just zoom in here so we can see the lows there, came down to around 1812. And just kind of having it zoomed in here, we do see higher highs in the stock price. And with that, we see higher highs in the RSI. That is no bearish divergence, so that's good. There's no divergence. There's no difference between higher highs. Both of them higher highs. No divergence. That's good. On the top side, that would be bearish. Over here, though, let's see. We do see so far lower highs. Maybe this is where some hidden bearish divergence comes in. If I just pull up the trend tool, we see the higher high here, or the high here, the wick high to whatever today's high is. If that does not get to, let's see, whatever this level is here, 2366 was the pivot high from March 25th. If we can't get the stock price up to 2366, especially on the weekly time frame, today is Friday, if we can't get above that, what do we see in the RSI? Over here, corresponding with this high, we saw a high in the RSI of 5169. Having some fun with that number there. And then over here, we definitely see the RSI higher, 6024 so far today. Yesterday was 5952. So seeing lower highs in the stock price, higher highs in the RSI. That's hidden bearish divergence. Also, as we are coming up to this level, let's see. We did see a pretty good amount of volume here at the buyers stepping in, so that looks good. But with this big green candle, fewer buyers, less volume here as that came down. So just a little bit of a weakness, needed a recharge before going up some more. But there hasn't been really that much volume behind this upside move here. But relative to the highs over here, let's see, just thinking about these three green candles here right in front of Ed's face. The volume here on March 21st, that was 7.85 million shares traded. Over here, we have 8.31, so that is more volume, so that is good. And then over here, we hit a high in price on that day of $21.59. Over here yesterday, so on the 24th, we hit a high of $22.37. So that is a higher high in the stock price. We can see very clearly where that cursor is, intersects with the candle over here, but very clearly it does not intersect with the candle over here. So that makes me think that this is looking stronger than it was over here, but it's really just going to depend what happens over the coming few days. Here we saw a gap up, then a big wick up, putting in that high of 23.66, but then it started to roll over effectively here, putting in a bear flag and a move to the downside. And just out of curiosity, I have not done this. I'm just going to do a Fibonacci extension from that high to this low here, to the high here, and look at that. We do have that 100% Fibonacci extension down to 1639, and that was, good dip buying level corresponding with that purple line. Let's see, where does that? That's actually a trend line. That is the neckline from this inverse head and shoulders pattern over here before the big move up, retest, and then bounce. So just looking really nice there, and that is, kind of a very nice way to kind of predict where things could be going if we do start to see, potential bear flag forming there. Although with this big green candle, kind of tough to really see that happening. But we can do something similar here with a move up here and then pull back. Maybe that is going to suggest a 100% move to around where we are currently at. So let's see that low from 1533 up to this high that was hit on April 9th. That was at a price of $20.37, right around to there. And then the low the following day was 1797, hit on April 10th. And so we see, the 100% extension. And, if you're wondering, what is the 100% Fibonacci extension? How is that different from a retracement? So a 100% Fibonacci retracement would be, starting down here, go up to here, 100% retracement, coming back to the bottom there. A 100% extension is taking the distance from the bottom here to the top, and then taking that same exact distance, that same measurement, but from the bottom here up to here. And so a way that I can show that is going from the low here to the high here. That's a 100%. That's 100% of that move. And then I just relay that to this low over here. I can't really see it though. Where is it? Be nice if it was like a big candle or something. But anyways, you can see that just being approximate to the low there, that does go up to around $23. So I feel like $23 could be acting as some resistance, and then maybe we get a pullback. Where might we pull back to from this? I don't really know, but there are some things that we could do to get an idea from that. One thing, just kind of eyeballing it, looking at the close from April 9th, that was at a price, just making sure it's right, $19.99. Yeah, so not $20, $19.99 on sale, $19.99 a share. So that is a level that could be acting as support. Also, we do have this gap here just above there. That is, based on the close from April 22nd. So on Earth Day, we closed at 2017, another level to the downside that we might be, hitting to fill that gap. And then another gap actually is based on the close from the 21st, we closed at 1925. So there are a number of levels here that could be, acting as support if we do get rejected up here, whether it's at current price or current high for the day so far is 22.66. Maybe that's a rejection from that orange uptrend and we do pull back. So there are some levels to the downside, or maybe, we go up to 23.01 or 23, whatever it is, maybe 22.95. People wanting to get limit sells at 23, and then they get left behind or left carrying their bags on the way back down here. So that is another possibility. And so thinking about, let's say the high ends up being 22.66, just the high so far today, as I am recording this in the morning on Friday the 25th. Let's say that's the high. We can do a retracement to see if there is kind of a confluence of levels here. But before I do that, I might just, make these gaps blue and dashed just so we can tell that those are gaps. And so we got those marked there. And then this level, I'm saying that's potentially, where we might retrace to, but maybe we go lower than it. So kind of yellow caution, not green. Just a little something there. And so now what we should do, or what I'm going to do, because I want to do it, I'm going to do a Fibonacci retracement going from the low over here from April 10th, which was at 1797, as I'd mentioned. I'm just going to go up to this high that we've hit so far today, which is 22.66. And just think about, are there some levels that might correspond with these other levels that I've drawn there, corresponding with this trading that's happened, the volume traded over here. Any buyers here, they might be buyers again on that dip. So, that's kind of, why we would have support there. And so I do have the 382 drawn up there, which I don't think is going to be significant. Maybe we pull back to 2087, but if we do that, I think we'll probably go a little bit lower. So I'm just going to add a couple more levels to this. Actually, I'm going to remove that 382 because I don't think it's going to be significant. I'm going to add the 50%. That's around 2032, corresponding approximately with that upper gap fill. So I find that to be kind of intriguing. Also being right around $20 a share, whole dollar, round dollar, bill number, $20 bill. Is that Jefferson? I forget. But yeah, so $20 right there. And then also the 618, that is at 1976, it looks like. And that is just below this yellow line here, below that gap, filling it, but not getting to this lower gap. And I actually find that kind of intriguing because, as retail traders, we can say, oh, there's a gap here, there's a gap there. I'm going to wait for all those gaps to fill before I buy. So there are no gaps left behind, and I can just go full position, whatever, once this second gap fills. But maybe that second gap doesn't fill, and then those who want it to be filled get left behind when it starts to rally above this orange line. And then they're like, well, crap, I missed it because I was being stubborn waiting for the second gap to fill. I'm going to now FOMO in. And so that's kind of like, market psychology. I think that's pretty interesting. But, maybe we do actually fill that gap. So I will add the 786 here, which would be around $19. It looks like at 1897. So I feel like, looking at this chart, I don't have buy orders placed, or at least I don't think I do. I don't. But I personally would be, if I were to be, don't have it and don't necessarily plan to be, placing buy orders, but I would place them at 20, right in between the 50% and the 618. And again, this is not financial advice, just kind of thinking about where there's the confluence of levels here. And there does seem to be a lot of them right around $20, plus or minus 30 cents effectively. And so, yeah, $20 seems like a nice level, but then if it does go lower, 19 corresponding with a gap fill and a near, if not retest of that 786. And also we can see that following, this little bit of a pullback here, this bearish engulfing candle here, we do see a good amount of consolidation below that 786 there, right in here, those candles topping out right along that level. That's going to be support because there were buyers down here. And so when we do come down to there, those buyers will become support. that will keep the stock price up. So yeah, I mean, I'm going to say like right around 20. Actually, I've got an alert down here. I don't think this alert's going to get hit, so I'm probably just going to adjust that. So let's see, 25, 23. I think I'll leave the 23 because I think that's significant. Also thinking about some options data, 23 might be an important level, so I will leave that one up here. But 1785, I don't think that's going to happen, so I'm going to adjust this alert to 19 like I was talking about, just so I'm aware of what's going on. And if it does come down to 19, maybe I have some cash on the side I want to add, maybe I don't, and I'll just kind of admire the levels that I have put up here, even though it looks a little bit cluttered. Yeah, and I will actually adjust the color to this 1844 level to be green because that was a nice dip buying level. But yeah, this 25, I'm going to adjust that to 20, and then I'm just going to make that below. I'm going to save that. So then I've kind of got these alerts over here for keeping in mind. And then let's see. So I'm going to adjust this one to be, I said green, because that was very clearly a dip buying opportunity there. And this yellow line, I'm actually going to make that orange because I think we're probably going to go below 19.99. I don't know how much lower, maybe to 19, maybe not. And so with that being said, I think that this retracement should then be colored yellow, not white, suggesting that, cautionary dip buying opportunities there, just like over here. And then once it kind of settles out, I can adjust that to be green like this one so we know where the dip was. And speaking of this, I should probably adjust this one to be red because, I think that 23 is probably going to be some resistance. So good to keep that in mind. But, talking about the possibility of pullbacks, it is red now as I have been recording this during market hours. That number's changing. Does look like we're getting a rejection from there. But I talked about all these pullbacks. I've talked about all these kind of bearish levels and whatnot. And actually, I should, talking about making these color coordinated and stuff, I should make this one green. So, I'm going to do that. Or maybe because it's kind of, one from the past, maybe I'll just leave it white. So, it's something from the past. It's not corresponding to something immediate that we should be paying attention to. But, the high over here, that's actually one that we want to be paying attention to because of that potential hidden bearish divergence, like I've talked about, lower highs in the stock price, higher highs in the RSI. And I'm just going to move that in front of Ed's face so you can see it there. Sorry if he was blocking it before. Sometimes he does that. But something that is maybe a little bit hopeful, maybe we don't get down to 20. I flipped this open. I opened this right before making the video, but didn't really look at it too closely, the moving averages. And maybe I'll just remove my drawing so we can see them a little bit clearer. We do have the 50-day moving average in yellow there. That is at 2168 currently, as you can see over there. That's a little bit below us. Maybe that acts as support. Below that, though, we got the 200-day moving average at 2068, 68, 68, kind of crazy there. But coincidence, I don't know. It'd be really cool if those were both 69s, but, can't have it all. Yeah, that might be acting as support, also kind of corresponding with the top over here. So, maybe there's something there. But then also thinking about this, we had this, I don't know if this is a bearish cross. It's not the death cross because that would be the 50-day crossing below the 200-day. But what we see here is the 21-day in pink crossing below that blue 200-day moving average. And we do now have that 21-day moving average at 1953. And so let's see if the yellow does cross below the blue, that would then be the death cross, and that would be bad. But I feel like with this big, candle that we saw on the 9th when markets started to rally on, I forget, it was something related to Trump and the tariffs and giving a 90-day extension. I'm not really sure, but we got that big relief bounce up 19.34% on the day, April 9th. That, really seems like, a bottom over here, hitting that low of 1533. So I feel like what might happen with this is maybe we pull back to that 200-day around 2060. Maybe we get a fake out break below it, maybe a wick below it to around 20, and then go higher. With the 21-day moving average here at 1953, I don't necessarily think we're getting to this $19 alert, but I do think we might be getting to that $20 one. So, but maybe not. So just keep that in mind, or at least I'm keeping that in mind. You do you. But yeah, just throwing up the levels over here. Got all this clutter, but it does seem like with all of that clutter, there are a lot of potential levels of support. I'm going to say coming down to that 200-day moving average down to that 786. And so that is a range from, let's see, around 20. Let's see, I'm just going to remove the moving averages so we can see. Oh, it'd be a measurement. That's how I get it. But yeah, 2069 down to, 1897 approximately there. So some possible pullback opportunities. But the thing that I wanted to talk about was something I actually posted on my X account over here. I will go over the data, but just kind of wanted to go over my breakdown of this. I would encourage you to follow me on X, dgen_Ann, because I'm Andy, whereas he is Ed over there. And yeah, I just post this because it's easy to do. I wasn't planning on doing this video, and partly because, I'm just going to be rambling a lot in this video, as you guys have probably noticed. But I just think, the more information, the better. It's helpful for me. Maybe it's helpful for you. But I posted this about Unity Software, ticker symbol U, as you all know, had some net call premium increase by nearly $2 million yesterday, so on the 24th, with a couple notable spikes or gaps up. And so what I'm referring to with that is this is just a screenshot with unusual whales. We will flip over to unusual whales in just a minute to look at the actual data. But what we can see, so for April 24th, this is the net call premium here in green. NCP, net call premium, up nearly $2 million on the day. So that looks really good. And all of this green volume suggests buying. So that does suggest that these calls, this call premium going up, is because people are buying calls going long. We can also see in the red is net put premium was kind of flat for most of the day, but then it kind of dipped down. Whether that's selling or buying puts, I don't know, but it did pull back some here. And that net put premium decreased over the course of the day by about $300,000 in total over the day. So that seems like that is maybe net bullish, but relative to the net call premium going up by $2 million, that's a pretty small amount of money relative, like I said, to that $2 million increase in net call premium. So that makes me think this is bullish. Also, we saw in yellow the stock price go up yesterday, so that is looking good. And we can see the thing that actually stands out a lot to me when looking at these kind of charts, you see net call premium increase. Oh, that's great. That's bullish. But if you just see it like gradually kind of going up or down like this, it's just retail, small positions, buying, whatnot. What you want to see is like spikes or gaps up. And so with Unity, we actually do see that 2 times, one time around 11:40, I believe. And then, no, I think that was 10:40. And then this one's around 11 in the morning. So I will look over at the data on that. And so those 2 points that I make on those little gaps up here is that at 10:40, net call premium increased from $167,000 to around $609,000, and that is corresponding with a $23 call. So I was talking about $23 being, potential resistance, maybe a potential very important level, and so that is a contract that expires in November. And so the open interest from that contract went up by 2.6 thousand contracts. So I'll open that in just a second. I just wanted to get onto this second point because both of those gaps ended up being the same contract. So right around 11, net call premium increased from $687,000 to almost $2 million, and that's corresponding with the same contract. So looking at the data over here, this is the volume traded for that specific contract, the $23 call that expires in November, about 210 days to expiration. And so what we can see on this screenshot is you can see it maybe a little bit faint in the background. There's an alert there. There's an exclamation point. And that is because the volume traded over here, 2.8 thousand contracts, is greater than the open interest, which at the time on the 24th was 91 contracts open at the start of the day trading on the 24th. And so we can get a little bit more information about that candle there. It looks like, majority of it, 725 contracts were presumably purchased on the ask side, whereas 3 were on the bid side, 1 was in the mid. And so that suggests that this was buying because it's on the ask side, but it doesn't always mean that. It's sometimes people get buys or sells at the ask or bid, depending on, the scenario. So, but, being on the ask side, that does suggest buying. And also, what really further provides evidence for that being buying is that open interest was only 91. The net call premium is going up, so that likely suggests buying, and that volume was well above that open interest, so that does suggest going long here. And what we can see is that candle premium was around $324,000. And so, that looks pretty good. And that average fill was around $4.45. And, that corresponds to 100 shares per fill or per contract. So that's actually $445 per contract. And so, that's a nice little spike there. But then we do see this big green candle sticking up behind that little info box. And so the next screenshot that I have is just really like a zoom in on that candle. And for that one, we can see, 4 on the bid side, on the ask side, 1,770. And that candle volume represents over 1,700. It's basically all of that. The 4 plus the 1,770. And the candle premium is around around $800,000. So $800,000 plus this other one, $300,000. That is, $1.1 million going along between these two candles here. So that is pretty interesting. So I am intrigued by that. Although, from looking back at the chart here, it does seem like $23 or this, orange uptrend could be resistance. So maybe we see something, like this, kind of what I was talking about. So maybe that is, the opportunity to buy will be coming up, maybe in the next week or two, let's say, perhaps before earnings, but maybe we get rugged at earnings. Look at Intel, got rugged during earnings, but I noticed some bullish activity in contracts. But this is dated out into November, so there's plenty of time with that. And so with that being said, I am just going to, let's see. This is the contract. So this is not the contract. So I just need to get myself together to look at this so we can see that for earnings. I'll just mention this before I forget. Earnings expected on May 7th in the pre-market. And so the expected move corresponding with that is a 13% move upside or downside, which would be about a $3 swing. So, while the data here does suggest the net call premium increase does suggest that this person's betting on or this stock price going higher up to 23, but maybe it goes up to 23 before earnings, and then there's a 13% swing from 23 down to 20, and then that's a dip buying opportunity, and then it goes up. So if that's the case, I don't know if I can stretch out my doodle. I want to stretch it out, but I don't think I can. So I guess if that's the case, maybe this would go up to 23, maybe hang out there, and then following earnings come down to like 20, and then go up, find that orange uptrend as support, and then continue higher. So that is, a possibility. And so, maybe this gets up to 23, but then consolidates below that orange uptrend and then breaks down. So, that's a possibility. So do keep that in mind. But what did I want to look at? I wanted to look at, I think, just the contract lookup that I have here. I got all these contracts over here. There's a couple of them that I'm in over here. They're actually behind Ed. One's a $42 call that expires in June. I'm probably going to lose money on that. The other one's a $65 call in January, expires in January. I might lose money on that, but maybe I make some money on it. But what we wanted to do, actually, what I wanted to do is look up the flow from Unity to look up that specific contract. So not the contracts that I hold, which I'll probably lose money on, but look up this one that expires in January, that $23 call that we did get the alerts on over here. And that this alert says, the size of the trade exceeds the current open interest. The size of these trades will be marked in purple. So we see those over here. And then let's see, the other alert is that this was a part of a flow alert. Click for full context. So we could do that, but I'm not going to do that. And just to note, the way that I have filtered this is by Unity Software, limited it to yesterday, so the 24th. And then I do have the minimum premium set to $50,000 there. And so that's how I get, just these contracts up here. So I'm just going to expand upon this one here. And I know that Ed is blocking that. So I'm going to have him step out of the way for a second. And so what we can see still, like I had posted in that screenshot over here, that we have that increase in open interest of 2.7 from that 91, not increase to 2.7, but that was an increase of 2,633 contracts. So that does suggest, bullish. But if we do look here, so far it looks like there has been some selling on the day, but that's only a volume of 10. So we're still up way more in open interest from yesterday, which was 91,000. If this was all selling 10, we're still going to be up over 2.7 thousand open interest. So that does still suggest going long. But, maybe I'll just pull it up on, let's see, my page here. There might be some garbage on this, but no, Intel, I said, over 6 million in net call premium today. That was yesterday, and Intel is down over 6% after hours. And so, over the past few days, we had seen net call premium going up with Intel. They reported earnings yesterday after the close, and maybe I will just pull up their chart here real quick so we can look at that. Yeah, down over 7% on the day, 1990 or so. But, we did fill this gap here. We had previously filled it, that blue line there, so nothing too crazy. But, in all honesty, I think that this is a dip buying opportunity really based on those contracts that amount of premium that was going into Intel. It makes me think net call premium going up. That does seem like, there's some bullish stuff going on, and maybe now we're just seeing a fake out dip buying opportunity so late bulls can get on board and ride this higher. And so here, just since I have been rambling on, I'm just going to finish with talking about the net call premium from Intel, which from the 24th, I had seen this before I went to work yesterday. It was up. Actually, today, I'm just going to refresh this page so we can see what is going on. Net call premium coming down. And I'm not looking at specific contracts or anything, but we can see over the past 3 days that net call premium was going up millions of dollars. And now it looks like net call premium is down about $2 million today. But like I said, I think that this could be a dip buying opportunity with Intel. And likewise, I think that we could be seeing, I don't know why I came over to here. I think I wanted to come back over to here to look at Unity to close the video on the stock price of Unity. Around 22.40, it does look like it's green as I'm finishing recording this. But like I said, I think maybe a rejection around 23 and then a pullback. If this does come back to 22, I think if the options data still suggests it, I think that could be a really nice dip buying opportunity. and maybe we do start to form this massive inverse head and shoulders pattern that I've kind of proposed, might be happening. Even though we have seen a pretty big pullback here, we still do have this lower low over here, so a higher low over here. Maybe it's like a devil horns inverse head and shoulders pattern, but this would be suggesting, neckline around 40, 45, somewhere around there. And from that, a measured move, basically the distance from here to the neckline and up, that would be putting price around 70, 75, maybe sometime in 2026. And so, yeah, I am just generally very intrigued by Unity software, but trying to not get too far ahead of myself, trying to buy the dips, not be chasing the rips. And slow and steady wins the race. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Have a great rest of your Friday and great weekend. I'll see you guys later. Take care.